Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 24th of October. Starting off with the FTSE 100, which is still underneath that, or closed underneath the old September support, around 73.70, and we're still underneath that. Potentially, we're going to roll over down to the floor of that falling trend channel from back in February at 71.50 is a worst-case scenario. We need to see decent days above 7,400 really to cancel out that particular scenario, especially given the way that the 200 and the 50-day moving averages are both falling at the moment. That's the equivalent of a dead cross. The situation there in terms of the RSI, it's at 35, so that still leaves a little bit more downside on that particular indicator, down to 30 or lower. Hence, we could have another day or two of downside at the very least. Moving on to the DAX, which has been in some ways even uglier than the FTSE in the recent past. We had the gap down through the floor of that falling trend channel, the overall top over the summer towards 16,000 and beyond, and really need to see this market back above 15,000 really in that last gap to cancel out the prospect of a retest of March support there at around 14,400. RSI at 32, so still not oversold, even though we've got this rebound that we've had, a small rebound today so far. Moving along to the Dow, and the Dow doing the same sort of thing as the other markets. In this case, we've got the uptrend line there from the beginning of the year. That is the key level, around 33,000, and that needs to be held for us to try and have a rebound for this market. Below the 33,000 level, the longer it stays below that, the greater the risk of a move down to the 30,000 area. But hopefully the old May support area, 32,600, will stem losses for now. On to Bitcoin, which has been the best of the bunch in terms of these major markets, straight through the target that we had, 34,000, just below, well, just in fact just above it now still, but that resistance line projection, the top of that rising trend channel from January, has done the job, and we gapped up through resistance as well yesterday, so very, very impressive. The next target we have here is, or would be, up towards a line I'm just about to draw now, heading towards the low 42,000 area. In fact, it could be a bit higher than that, up to as high as 43,000, and that line there from back in October last year. So the view at the moment is above the 30,000 area, 32,000 to be precise. We're looking for as high as 43,000 on Bitcoin. So a real breakthrough there. And the other thing to remember is that 34,000 and above would be more than half the record high that this market achieved a couple of years ago now. Seems like a long time ago. Moving on to the stocks, and quite appropriate to look at Argo blockchain first. I covered this a couple of days ago, and the key here was breaking that 50-day moving average there around 8.5. Given where the Bitcoin situation is at the moment, we should actually expect this to be back up at July highs, because the market at that time was around 30,000, but now at 34,000. But initial target here, the technical one, 12.25 pence, hopefully by the end of next month, and if we're really lucky, by the end of this month. It probably should be by the end of this month on that particular call. Moving on to a stock which has given us a reasonable setup. It is a island bear trap, so gapping down, going to new lows, and then gapping up again. Above that resistance line there on the Altyn daily chart from late July at 95 pence, we're looking at for as high as £1.20 by the end of next month. But a very nice bear trap island reversal on that daily chart. At this stage, only back below 90, and in a sustained way, and the top of the latest gap really delaying the upside. Looking to Blue Star Capital next, and I have to say, there have been many false dawns here. 3 horrible ones in the first part of the year, but maybe this is 4th or 5th time lucky, just breaking out of that falling wedge that we've had since December. Above 0.09 pence on an end of day, or preferably a weekly close basis, we could be heading up to 0.14 by the end of next month. Presumably, this stock is getting a bit of a boost from the crypto improvement. A call which has gone well from earlier in the week is Caracal, and nearly hitting our initial target there at 0.38. That's the top of the falling wedge from back in March. We had bullish divergence going into the turnaround, and then the break of the 50-day moving average yesterday at 0.23, the trigger for the move that we've had today. If you're a fan of the shares and looking for greater glories than 0.38, then the next target would be as high as 0.6, which we've been admittedly looking for quite some time, but this looks as though it is quite serious in terms of a turnaround, especially if we can stay above the 200-day line at 0.32 on an end of day or a weekly close basis. So good news there for Caracal fans. Hopefully Eurasia fans will also have a better autumn. We've had the bear trap from below the May support there at 2.04 pence. Above that we were looking for the top of that falling trend channel from April as high as 3 pence, but 3 pence has been the sticking area for the shares in the second half of the year. We really want to get this stock back above the 3 pence area, and preferably the 200-day moving average at 3.2 pence. We haven't been above the 200-day line properly since the beginning of last year, so that would be quite a turnaround and quite a trend change if we get above that 200-day line, but still quite a way away, still half a pence away from that particular scenario. Another stock which may be about to turn is Future Metals. I have to say it's early days yet, so one wouldn't want to get too excited, but there is an uptrend line in the RSI window. We bounced off the support line there from June a couple of times, and we've had 3 bounces off the RSI trend line, so that tends to be a leading indicator on the turnaround. Initial target here up to 2.2 pence. Best case scenario is up to 3 pence by the end of next month. Let's see if the shares can deliver on that. News out today from GreenRoc, and that's given us a bear trap gap reversal, so temporary new low there below 3.5 pence, but gapped up today. Looking for the shares to head back towards the 4.8 or even 5 pence area. There's a resistance line projection there from April up to 5 pence, and ideally that happens by the end of next month. The other positive is the bullish divergence line, so lower low to start the week or at the end of last week, but a higher RSI trace. So let's see if GreenRoc can deliver the goods. Don't think I've ever looked at ProCook, but here we are. It looks like a broadening triangle base there, based around the 18-19 pence area. We can stay above that line there from June, and that triangle floor at 19 pence. We could head up to 27 pence, which wouldn't be a great recovery given the fall from 40 pence plus, but it would be a good start and suggest that the worst is over for that particular stock. Another stock which has done rather well of late is Plexus, and we were thinking that the shares had bounced off old resistance at 18 pence to start the week, and it looks as though they've done that well. Looking for a retest of 30 pence over the next couple of weeks, which was the September resistance for the shares. But the key here now is holding above 20 pence and a previous target there for the shares. Stock which has also behaved itself is Quantum Blockchain, and we had our best case scenario target there around 2.4 pence. Managed to beat that, and it's very rare that we get up to the extra target there, which in this case is around the 3.2 pence level. We've gone up to 3.12 so far today. Hopefully we'll get that by the end of the day and then head up even to an even better level, which would be 4 pence, which is basically 2 or 3 year resistance for the share. So real turnaround there. Very impressive move indeed, especially with the latest unfilled gap to the upside. So well done to holders there. One of the more difficult stocks to chart at the moment is Regtech, and here, obviously not for widows and orphans. It may have created a few widows and orphans with that decline back from £3. But what's interesting now is you can see some neckline resistance there around the 15 pence level. So if we break that, it could be the first sign that the shares are ready to turn around. There's already a notional trend line break there from back in September. And so today would be the trend break day, but as I said, it's given the rather horrific price action of the recent past, you want to see 15 pence broken on an end of day close basis to then feel safe-ish that the turnaround was about to start. Good stock in the near term has been SkinBio Therapeutics, and here we've got a rising trend channel. We had a little bear trap below, which I think was spotted earlier in the week, and the top of the channel there heading for 36 pence, which hopefully will be hit by the end of next month. while we're above neckline resistance, September resistance at 24 pence. So above 24, looking for 36 on SkinBio. Been a bit of a pullback in seed innovation. Here we bounced off old resistance there, the July resistance around 2.5 pence. Breaking through a rising 50-day line, that suggests to me that we could easily retest the best levels of the month at 4.3 pence by the end of November, and hopefully a bit sooner than that. We've got the 50 and the 200-day lines rising there. All that's missing probably is for the RSI to go back above neutral 50. On to Tirupati, which has done well in terms of the rebound caused by China blocking graphite, and we had our initial target here towards 22 pence. I think the high today so far 20.5 pence. One can now go for a higher target, which would be around the line I'm just about to draw, basically up towards the 200-day moving average at 29 pence, and hopefully we'll see that over the next couple of weeks. But a great bear trap gap reversal, one of the winning turnaround formations in charting, plus we've had the backup of a bullish divergence line as well, so the charting working very well there. And the upside looks to be sustainable while we're above the initial October resistance at 17. So above 17, looking for 28 or 29 on Tirupati. Finishing off with Upland, which had its big news yesterday with the potential 14 pence takeout. Here I think the shares have done pretty well. We managed to find support above the top of the gap at 4.75 pence. The longer we stay above that, the greater the chance of a retest of 8 pence, and then the big target here, the red line I've drawn from way back in 2018 at 10.75 pence, and maybe we see that by the end of next month if we're lucky. But the key here is staying above 4.75 and ideally even staying above 5 pence, which obviously was today's support area. That's it for me today. More updates tomorrow.